Hey, good morning, everybody, and welcome into this week's long-form episode on Mining Stock Daily. Trevor Hall here with a one interview with Simon Hunt, welcoming back the professor, Simon Hunt, from Dubai, talking all things markets, but also geopolitics and really what the dynamics of the last couple weeks have meant for all things. And Simon really paints a picture out there of what his expectations are for equity returns over the rest of the year, and then also in stretching out into 2026, 2027. We also talk about gold, obviously, and really what that is telling us in the big story and picture of things and what's happening throughout the world. So a special thank you to Simon. He's always a crowd pleaser, and all the listeners expect to have a lot to take notes on and probably go back and listen to 2 or 3 times again to make sure they're understanding everything. Special thank you to Visa Silver and Caliber Mining for their continued support of the podcast. And again, if you wouldn't mind hitting that like, subscribe, share all the things on either the YouTube channel where this will air and also on the podcast networks, whether it be Spotify, iTunes, the like. Always a pleasure as this market continues its positive momentum, and we are starting to see a lot of people maybe come back into this content that's been absent the last couple of years. So welcome back if that's one of you. All right, everybody, let's jump into this discussion with Simon Hunt. Have yourself a great weekend, and we'll be back Monday. Be well. All right, everybody. Great to end this week with a thorough conversation, which is always what happens when we have Simon Hunt onto the MSD podcast. Simon Hunt, CEO of Simon Hunt Strategic Services. And this is the first time, Simon, you've been on the podcast this year, and it's just been an eventful 6 weeks of 2025, obviously with geopolitics, a new U.S. administration coming in, and a lot of evolving events happening with overseas events such as the war in Ukraine and the actions with Russia. We also have some movement with tariffs on the economic side put in place by President Trump. And then on that, we're going to follow up and talk a little bit about the commodity space, specifically what's happening in copper. And I can't leave you without talking about what's happening with gold as well. So these are all topics on the list of things today, Simon. So we only have about an hour, so we're going to have to try to keep it within that. But it's really good to see you. How are things? How have you been?
Yeah, good. Very busy because of what you've just described.
Right.
I mean,
So how do you start your day? Where do you pick up the pieces from day to day here, Simon?
the strange thing is that I go to sleep thinking about how do I put the dots together. And sometimes I wake up in the very early hours of the morning, like 2 to 3 o'clock, and say, I've done it. Then I go back to sleep and I get up at 4:30, normal, and I'm on my computer at 5 o'clock. And I say to myself, how do you solve the problem? I'd forgotten it. So I have to start all over again.
Well, let's talk about those dots.
It's,
Like what?
Being serious, it is such a moving feast. There are so many contradictory dots. But how do you put them together? And you think about it, and you come to a conclusion, rightly or wrongly.
Yeah. Let's talk about those dots. I mean, there's a lot of them to try to connect here, and they've been kind of in motion for a while now. This is even prior to Trump coming in his second term as U.S. president. But the relationship, the geopolitical relationships between East and West are appear to be getting disruptive, I guess you could say. And I think that was pretty evident with Vice President J.D. Vance's speech at the Munich Security Conference last week.
Which was
that was
brilliant.
It was a
Brilliant.
shock and awe moment. So maybe let's talk about that, because I listened to it. Like, at first I saw kind of the response online, and I was like, okay, well, I have to go back and listen to this entire thing. And it really was something to be seen, I will say. And it almost felt like a moment where there was a line kind of put in place between the United States and the European Union. Say things need to change.
You've said exactly the right words, the European Union, not the member countries.
Right.
Because what Vice President Vance said, the average guy in the streets in these countries knows it. But it was the elite that got completely shocked. And I thought one of his best lines was when something like, oh, over those couple of mountains, there are those guys in Davos.
Yeah.
You know what I mean?
Yeah. Yeah, exactly.
Klaus Schwab, and you won't earn anything, but you'll be happy.
Yeah. Was this a moment where things, do you think we'll look back at that moment and be kind of reminiscent of that that moment in time where maybe things started pivoting, and we'll see where things lead and what that relationship looks like. But do you think there could be a moment in time where maybe the European Union starts heading in a different trajectory?
That's a very good question. I think it is equally a momentous occasion as when in 2017 Putin gave that famous speech at the Munich conference. I think there's going to, if I look 5 years out rather than today, because big changes don't happen overnight. And I think that the populace, the electorates of nearly all of these countries are sick and tired of their governments and being ordered around by highly paid, unelected officials in Brussels. We saw it last year with the French farmers rebelling against their government. And if you go back through history, it's always the peasants / the farmers who start revolutions. You had it in Holland, you had it in Germany too. I think it's going to be very important to see who wins the February 23 election in Germany.
Mm-hmm.
The AFP party, which the media has called a party replicating the Nazis, is completely untrue. If you listen to the leader, she is very articulate, very sound, and very pragmatic. I mean, I was talking to a business friend in Düsseldorf today, and he was saying we are praying for a new government. Part of the pickup in sentiment is due to this,
Mm-hmm.
a change in government. And then he qualified it by saying, Simon, this is hope.
Mm.
We won't know until so many games can be played that who knows what's going to be the outcome. But I think that there is a definite wind of change throughout Europe, which is away from Brussels and back to national governments.
The
It
end
ain't
of the
going to
year.
happen overnight, but it will happen.
Do you think this is the beginning of the end of the European Union, or do they go back to their
Yeah,
own
that's what I
sovereign
mean.
countries?
It's the
Yeah.
end of the EU.
Well, and Germany's not the only country. I mean, obviously, there's continued movement in France and also in Spain, and we're starting to see. We've already seen some of this movement out of countries in the eastern part of the bloc as well. But it is really fascinating. I think along the lines here, you have this beginning to unravel of the EU, and also what's happening with Ukraine and continued movement and dialogue towards some sort of peace negotiation between Ukraine and Russia, and we'll see who comes to the table and what those discussions look
Wrong.
like. Okay.
Sorry,
Okay.
not between Ukraine and Russia, between Russia and America.
Sure. That you're absolutely right. So but this position of Ukraine with their close ties to the European Union wanted to be part of NATO. How does this kind of fit into the puzzle? Is Ukraine's hand going to be forced here to come to the table because they're basically losing support?
I am sure that Russia is saying to America, we need to restructure the security architecture of the whole of Eurasia. Only when we have done that will Ukraine fall into place. And that my sense from listening to Russian reporters and American reporters is that America is listening to what Russia is saying, and Russia is listening to America. Whether when it comes down to the substance of the discussions rather than listening to each other's principles, whether they can agree something is a different question. But I do think that there is an understanding by both parties, both countries, that we need a restructuring, not just of the European security apparatus, but the global one. And I suspect that President Trump's ultimate objective is to develop a system whereby the BRICS group of countries are merged into the American group of countries, so that you create spheres of interest. Now, whether that is achievable is a completely different question, because it seems to me that American policy towards China and Russia is a divisive one, the reverse of what President Nixon did by cozying up to China to break China away from Russia. This time around, it seems to be cozying up to Russia to isolate China.
Mm.
I think the strategic alliance between the two countries is far too strong. for that to work. Russia has the natural resources that China wants. China has the manufacturing industry that Russia needs. And they have a 4,300-kilometer border, joint border. And as they have a strategic friendship alliance, other than the odd incidents, there's no fighting along that border. So I think it's going to be very, very difficult to break that alliance, and I think it's unbreakable for at least 20 years. So then we're going to come down to substances. I'm sure that the Russian delegation said to the US delegation, they set out their principles, which are frankly non-negotiable. And the biggest one of all, as we discussed before, comes back to security. Russia is looking for security of the sovereign state of Russia, and that cannot exist by drawing the boundary line along the Dnieper River, because sooner or later, America is going to have hypersonic technology or the equivalent, and in which case they need not just that, not just Eastern Europe, Ukraine, but Western Ukraine as well. If not in ownership, at least in some form of ability to control. And if Europe thinks that they're going to be sending peacekeeping troops to patrol the border, forget it. Putin won't allow that. Absolutely no trust, given that you've had European and American specialists, forces operating in Ukraine against Russia. Trust is going to take a long time to be rebuilt. There's a start, yes, but I think it's going to take months, if not longer.
Mm-hmm. So what you were just describing along the border there in Ukraine, it seemed like very similar to like a demilitarized zone that you see in the Korean Peninsula. Is that fair to say?
Yeah, but demilitarized is all
maybe more militarized zone would be the better.
It's all Western Ukraine.
Yeah. Yeah. But it's interesting here because I think as most Americans, I think we have come a little bit tiresome. At least the support for the events in Ukraine is waning and has been for some time. When it first started, this was supposed to take a couple weeks. Well, it's been a couple years. And the type of warfare has been very, very different. It's been a technological warfare. Sure, there's people on the front lines, sacrificing their lives, with traditional warfare, tanks and rifles and whatnot. But there's also this technological new era of warfare using drones and using developers and artificial intelligence. And we're seeing that on both sides of the border, not just in Ukraine, but also in Russia. And I was reading a new book that just came out called Unit X, and it was talking about the relationship between Silicon Valley technology and the Department of Defense, the U.S. government, and how these two entities are trying to merge together and make the DoD less bureaucratic and cumbersome and fast and evolving and quick light in adopting technologies that Silicon Valley can provide. And at the end of the book, and kind of they had an excerpt about Ukraine and the technologies being used. I walked away from reading this, and I was thinking, it almost felt like this events in Ukraine have been prolonged because the United States needed a little bit of a practice run, for lack of a better terminology, Simon, because we just didn't have the technological advances in warfare needed to fight whatever that next big war would be. And so it provided us a little bit of a playing field to adopt some of those strategies. Now, if that comes to an end, my question, this is just an open question, we can have a conversation about it, is if we will be prepared for whatever comes next in a type of a global conflict and what warfare is really going to look like. So have you given that any thought? I mean, that's something that's been on the top of my mind for the last couple of weeks, actually.
Well, it's very clear from watching what's going on in Ukraine. As you say, it's a technological war now.
Mm-hmm.
So who is sitting in the data centers and the command centers in Ukraine? You've got specialists, and where do the specialists come from? I mean, we have heard, as other peoples have heard also, is that time to time, Russia has destroyed the command and control centers. Reports emanating from those destructions that there were NATO member country specialists operating there. Mm-hmm. It's a known fact, which comes back again. You're trying now to negotiate peace. Sorry, Russia's saying, sorry, you guys, you are actually fighting against us.
Yeah. The aftermath of this, maybe, if there is a peace negotiation that's brought to the table, and Putin and Zelensky, I guess, lay down the arms for, given a sense, what is the best case scenario for the aftermath? I mean, what happens here between the borders between Russia and Ukraine, but also the relationship between Ukraine and its European allies and the United States? Is that soured for quite some time here?
That's a very complex question to answer, because Europe is in such panic mode at the moment that, as part of that panic mode, they're offering Ukraine, we're going to support you. We're going to send troops to you. Oh, as Americans say, you can send them there, but they're not going there as a member of NATO. So Europe is in complete disarray on what to do. America is not going to support Europe in this. So again, it comes back, I'm afraid, that the European leaders are not going to be able to agree amongst themselves, part of the dissolution process.
Mm-hmm. Well, we will see how these events continue to unfold. There was just news out earlier this week that Secretary of State Marco Rubio, they did agree to pursue 3 goals in these negotiations. As you mentioned, America and Russia. Doesn't sound like Ukraine's part of these discussions, but to restore staffing of embassies in Washington and Moscow, that would be a huge sign of improvement. Create a high-level team to support Ukraine peace talks and also explore closer relations and economic cooperation. So, as you had mentioned, Simon, all these are on the table and things that will be pursued. So it'll be eventful 2025, to say the least. And on the back of this, maybe let's turn our thoughts over to economics here. Um, and what's interesting here, as soon as President Trump, well, actually, when he won the presidency back in November, it was pretty obvious that he had become president of the United States on November 7th, the day after he won. He was given this huge mandate through the voters, through the popular vote and the Electoral College, to move forward with these policies he campaigned on. And I think there's a lot of optimism, at least with investors and equity investors here, Simon, that the boom town was back in Wall Street, that equities were going to move higher. And they did shortly thereafter the inauguration, but has really kind of stalled here the last couple of weeks. It's a classic case of bulls versus bears. But it certainly hasn't been the raging bull market that a lot of people were expecting as soon as Trump came into office. And maybe just wondering why reasons to be concerned here, or are you a little bullish on the U.S. equity market? And I guess on top of that, with the amount of news coming out of the White House almost every 20 minutes, is there a point of fatigue here with investors?
I think that the first 6 to 9 months of this year, the American economy is going to weaken, if not go into recession. Look at the employment data. It's being revised down. Look at the data that's coming out from private surveys. It's not good. Last year, retail sales rose by 3%, just under. Nominal terms, official CPI rose by 3%. So, in real terms, retail sales were unchanged. The problem with all of the American data is the methodology used for CPI, which ever since Arthur Burns in the 1970s, who started meddling with that methodology, it's been continued by successive administrations to a point where the official CPI is a completely useless number. Probably one of the reasons why so many households shifted from voting Democrat to voting Republican is because they see it in their weekly, monthly household bills. Inflation was not 3%, closer to 10%. And there's a guy that I follow called John Williams of Shadow Government Stats, takes all this methodology back to prior to Arthur Burns in the 1970s. He comes out with a CPI figure for America last year of 10.8%. Then you had Larry Summers and a group of his guys took the workings back, I think it was to 1983. And they came out with a figure, I think it's something around 8% for last year. So what one is really saying is that with migrants being thrown out of the country, all have been receiving income, one form or another, a weakening labour force, interest costs at the moment too high for a lot of people, uncertainty because of new administration, that for the next 6 to 9 months you're going to have a weak economy. So I think that in Europe, there's a pickup in hope, but the hope is dependent on a peace deal in Ukraine and on Germany on a new government. As my friend in Germany said to me this afternoon, yeah, we've had a pickup, but it's hope. I think that we're not going to see too much growth in Europe in the first 6 months. I think that comes later. We will see a significant recovery in the Chinese economy following next month's NPC meeting. But that really won't start taking real effect until May, June. So globally, the economy is going basically nowhere in that period. And if you are a new president coming in, you would much prefer to see the worst happen quickly rather than later on. Then you can blame it on the previous administration.
Yeah.
And you can also, get a lot of the speculation out of the system. So you start from a much firmer base. So against that background, I think that there's going to be a significant correction in global equity markets, including America. Say a 20% fall is what we're looking for. Maybe a doubling of that in the high-tech sector, the FANGs in America. What does that do to base metal prices? Shakes a lot of the bulls out.
Sure does.
So I think by September, we're going to see significantly lower base metal prices. Gold, I think, very short term is overbought. Every man and his dog is saying higher prices, including the big investment banks. Common sense rather tells you, wow.
Yeah.
That's if I'm long physical gold, I certainly would not be a seller, because all corrections should be bought, because over the next 2, 3, 4, 5 years, we're going to see significantly higher gold prices. But what takes us out of this rut? I think that by September, Trump is able to get his tax cuts off the ground, deregulation moves off the ground. A weak economy will mean that the Fed will be cutting interest rates. Scott Bessent will want long rates to fall because he's got a lot of refinancing to do. So we will see a short-term spike in 10-year treasuries to maybe 5%. And then by the end of the year, we're closer to 3%. So the dots, in our view, come together. And with the introduction of tax cuts and deregulation, monetary stimulus, and other central banks will be following suit, we're going to see, where are we, 25, 2.5 years of boom time for equities and base metals, but accompanied by rising inflation. I think inflation is going to track what we saw in the 1970s and early 1980s, when in 1980, CPI peaked at 13%, global inflation at 15%. What does that do to long bond yields? Double digits. What does that do to a highly indebted economic system? It crashes it. So it's a period that we see into 2028. It's not a long-term investment cycle. It's a short-term trading one.
Mm. Fascinating.
Because I think from 2028 to 2032, it's going to be a very, very rough period. A significantly lower equity prices, significantly lower base metal prices. If you're going to develop a mine, and the time period is post 2028, it's the time to do it because your input costs are going to fall dramatically. Labor, energy, everything.
There's a window of opportunity potentially there opening up.
Yeah.
Simon, I want to kind of I do want to talk about gold, but before we get there, just kind of get your outsider's perspective, from your office chair about this ongoing debate about the inflationary aspects of President Trump's tariff policies. Where you kind of some thoughts on that, but also on top of the tariffs, obviously I think the latest number that I've seen out of the Department of Government Efficiency is that 200,000 people in the U.S. government have been laid off. And that's going to have implications, right, in the employment data, as
Huge.
well. And so,
and spending. Spending.
Yeah. So how are we supposed to balance this and kind of looking forward to the data that comes out here in the next 3 to 6 months in the U.S.? I mean, are tariffs inflationary? And then what about these employment numbers to be very mindful of?
Tariffs will be inflationary, but there are other elements that are going to push inflation higher. I know Trump wants lower energy prices. I don't think he's going to get it, particularly when you have a global economy from 26 to 28, say, is booming. When you get booms like that, it's not just the real underlying demand. It's financial institutions going long of physical things. That applies to copper, perhaps more so than oil. But the real outlying force that is going to propel inflation is food prices. We have 2 cycles that should come in either late this year or early next year. First one is the Beaufort 89-year cycle, which 89 odd years ago created the U.S. Midwest decade of drought. What did that do to food prices? I can't remember the exact number. Went up something like 60%. Second long cycle is one called the Beaufort Guy cycle, which is where a lot of fresh water is locked in around Greenland. And it waits until enough ice has been broken up, that it releases that water into the Atlantic, which causes cooling weather. And that has an impact on grain and agricultural production. So it puts into all this nonsense about warming weather. It's nothing more than long-term climate changes that last 40, 60 years plus. So we start emerging, probably starting next year, into 40-odd years of cooling because of weakening sunspot activity and falling ocean temperatures. That has a side impact in that the surplus CO2 emissions then get absorbed by the oceans. The oceans can't absorb them when the temperatures are warmer. Ocean temperatures are warmer. So you've got a lot of important developments that will emerge over the next 3 years that are going to have important consequences to inflation.
This is beyond the egg prices and avian
beyond
flu.
beyond what is money supply doing. And it's human nature. When prices start rising, you buy more than your immediate requirements. And what do manufacturers do? Instead of destocking, they restock. It's their hedge against what will also be a falling dollar. Probably starting later this year, we'll move into a multi-year period of dollar weakening.
Well, that's going to be a positive move for commodities in the midterm, as you said, the next couple of years. And it's something that President Trump, he's not bashful to say that that's something he wants and be beneficial.
He'll love it. He will love it.
Yeah, exactly. Well, and so would guys like us.
I think he loves inflation too. Inflation is good for property prices.
Absolutely. I mean, yeah, that's hard to disagree with. And kind of the big question, thinking over the next 3 years, Simon, is just you said something earlier, and I really agree with you. There's going to come a time within this administration where putting blame on the previous administration isn't going to pull the same weight. So you can maybe do that immediately after taking the White House.
Exactly. That's why I said.
There's going to be a time where, listen, these are your policies. You're going to have to own them, with good or, positive or negative reactions. And I don't know exactly when that time frame, when you make the leap into having to own it or not, but we'll wait to see. And I guess if President Trump was put into this office for specific reasons, to battle inflation, to decrease the size of government, decrease spending, and I think he's well on his way to doing at least one, if not two of those things. And we can have a debate if that's on the right path or not here in the first 6 weeks of his administration. But there's one thing he didn't do in his first administration, that was decrease spending, decrease the size of government. And so I'm just kind of wondering, when this political, how close the people are going to be paying attention to saying, are you doing exactly what you said you're going to do in all three aspects, not just one?
Well, I think he's spent, and it's quite obvious from what he's coming out with, he spent 4 years thinking about it.
Yeah.
Thinking who he's going to be surrounded by. I mean, he was surrounded last time mostly by deep state guys. Now he's got people he knows well around him. That's a big change.
Yeah. people from industries that know how to run a business and
Yeah, and people that
manage.
he knows,
Yeah,
instead
yeah,
of somebody coming in because Mr. X said you should have it.
right, right. Let's can we talk about gold? We hinted at it a few times in the last few minutes here, Simon. But this whole move in gold is quite fascinating. We've had a number of conversations here on the pod talking about the repatriating gold back to the United States. Supply of the physical metal appears to be somewhat squeezed. And I remember the first time you and I chatted, we were talking about copper and asking you about supply, and you threw a bunch of information at me that really put me in my place and made me second guess whether my analysis was right or wrong. But let's transition that into the gold space and talk about this move in gold, not the price, but the actual physical movement of gold bars and kind of what you think is happening here.
Well, I think the bigger picture, and then we come down to answering your question. The US Treasury and the Bank of England are the two big shorts. And the big longs are Russia and China and some Gulf countries. But the two big longs are Russia and China. So I think what is happening is that it's pretty clear that the Bank of England has leased or hypothecated out its gold. Why should it take 4 to 8 weeks to deliver gold from the vaults in the Bank of England, which are in the center of the city, into the buyer's hands? So if there was no rescue operation, de facto, the Bank of England would be in default. You can't have the Bank of England in the global system defaulting. So there's obviously a big operation for holders of physical gold to lend to the Bank of England so that they can deliver physical to the buyers. Then you've got the shorts in America. And who is the biggest short? The US Treasury, because they probably don't have the gold they say they have, but they operate through their friends. So the friends are short. So there's a huge move to the shorts to cover because they can sense that the path for gold is upwards. And even if Scott Bessent saying, I'm going to monetize the assets on my balance sheet, which includes gold, which he'd like to do at some point, he can't do it if he doesn't have it.
Mm-hmm.
And then if he marks gold from $42 an ounce to the market price, current market price, that gives him $760 billion. So if he did that, every other central bank would mark their gold to market prices. I've done the figures, but I can't remember I think it gives, excluding Russia and China, it gives you close to $3 trillion of new liquidity globally, excluding Russia and China. But Russia has, as far as we know it, at least 12,000 tons. And China, about 50,000 tons, split equally between the public and the government ministries, a large part of which is the PLA.
I think are you at all surprised we're starting to have discussions about the auditing of Fort Knox through all this?
That's what I'm saying.
Yeah.
There are some quite important figures who in Congress who are also asking for it, but it won't happen until the gold is physically there. That's
Yeah.
why I've said,
Yeah.
who are the two big shorts? The U.S. Treasury and the Bank of England. But there is the central bank community, through their friends, are probably have begun and will continue to lend gold to them.
I think the what I have heard is that the U.S. Treasury's gold supply, a large amount of it is on loan to the Federal Reserve, and that could, if it is revalued mark to market on the Federal Reserve's balance sheet, I think that number, at least, and these are the numbers I got from Adam Rosenzweig in a Grant Williams podcast earlier this week, was that looks like $880 billion. Now, that's just mark to market.
Well,
what
how
if
do you get, so that's a bigger figure than 8,133 tons?
I don't think he placed the physical quantity on there. I think he just had a valuation. So
yeah,
I'd have
but
to
you
go back and
can't
look
get
at the
to that.
transcript.
You can't get to that figure unless it's a bigger figure than 8,100 odd.
Sure, and I think you'd have to go through the Federal Reserve balance sheet to get that specific amount. But it's still valued at $45, right? So
It's a big number.
it's a big number. It's a big number for sure. But what happens if you revalue that to current spot price? What if you've revalued it to a higher price? What if it was
Well,
$4,000 or $5,000 an ounce?
What's that going to do to money supply and liquidity? Boom, boom, boom.
Boom, boom, boom. And now you're talking about another tweak in the monetary system that actually is backed by physical gold. I mean, it's not a gold-backed system, but gold is now has a much higher impact with the U.S. dollar system than it did over the last 50 years. So it's very interesting. So all this de-dollarization talk, I don't think I'm a proponent that we are not going to de-dollarize. You are still going to use treasury notes and the greenbacks, but the mechanics behind it are going to change. And I do think potentially that gold's going to have a higher impact on that, whatever that looks like in the future. So, but yeah, I mean, why not?
Well, if prices of so many things won't be related to the dollar, they'll be related to gold.
Right. Yeah. So the cycle comes back.
Yeah.
Very fast. Yeah. Very cool. Simon, we're reached to the top of the hour. I want to be very mindful of your time. And thanks so much. You always give us a lot to consider, a lot to think about, and especially times like this when we're inundated with things from every side of the world, not only what's happening here in the U.S. and in the West. And I want to thank you so much for all your insights and the discussion. It's never a dull moment when you and I connect. And yeah, thanks so much. And
thank you for having me. And if your guys want to contact me, they can get me through simon-hunt.com.
Yep, absolutely. And it's well worth it. Simon, have yourself a great rest of your week, and we'll talk to you again soon. Thanks so much.
Super. Thanks for having me. Cheers.